Let's listen to Bharat Puri, the Managing Director of Pidilite Industries, talking about the Q2 performance and the outlook going ahead.
If you look at the first 6 months, these have been a fairly unnatural 6 months. You started with a long 2.5 to 3 month election almost. It was followed by a severe heat wave in a lot of geographies. The monsoon then was very unevenly distributed, and then when it came down in buckets and therefore caused substantial disruption in some geographies. And therefore, in many ways, this half has not been a natural half by any stretch of imagination. In that context, obviously, demand has got impacted more in some places, less in some. And in my view, the real picture on demand will emerge over the next 3 to 6 months. Possibly the next three will give a good indicator because, the festive season, and when you have a shorter festive season with a November 1st Diwali, November and December tend to be good. So you will, when we speak in January, we will get a better idea. Therefore, could demand conditions have been better? Was it a little subdued? Yes. Was it because of physical factors and income related factors? The answer is absolutely not known right now. Physical factors were clear. I would say let's wait a little before we say that urban demand has genuinely, over a longer period got subdued, because we don't know what's the impact of the physical factors versus the real factors.
Okay, fair point. Okay, maybe in Jan we get a better sense of that. We will talk about broader demand with you as well, because your product's slightly different than per se FMCG. But put the quarter into perspective, because a 5% revenue growth, is this what you penciled for, or could you have done better? And the specifics of what worked well and what didn't.
See, when we look at it again, and Neeraj, I would rather look at the first half, because quarters, things shift so on. If I look at the first half, our underlying volume growth is about 9%. We normally would have liked this to be a double digits. But again, given all the disruption that we saw, our belief is this will be in the top, decile, or definitely amongst the top companies in terms, because remember, this is underlying volume growth and not total volume growth. Our total volume growth is actually in excess of 15%, but we've always maintained that the right measure for any company to measure volumes is underlying volume growth, because you must look at the impact of mix. So therefore, overall, we look back with satisfaction. Could things have been better? Absolutely, yes. But as I said, most of that was external, and what is outside your control, you shouldn't worry too much about. Worry about how you can do better within what is in your control. And we've continued on our journey. Our core categories still continue to grow close to GDP. The growth categories continue to grow 2 to 3 times GDP. We've introduced, if you look at the amount of innovation, for example, that we have launched over not just the last 3 months, but over the last 6 months, substantial innovation in each of our divisions. In Fevicol, we have a new Fevicol Nail Free Ultra, which replaces the nails in your home. We have a Fevicol Hyperstar, which is a super premium version of Fevicol. In Fevikwik, we have a full range now from 5 to 75 rupees. Earlier, Fevikwik used to have one 5 rupee SKU. We now have a Fevikwik Advanced, we have a Fevikwik Gel, we have a Fevikwik that works underwater. So you will see that Pidilite innovation has always been one of the secrets of our success, and we continue to push there. For us, we've always maintained that rural is going to be a sign of growth, and even in the first half, our rural growths are twice our urban growths. We've added another 1,000 Pidilite Ki Duniyas. We now have over 15,000 Pidilite Ki Duniyas, our Pidilite branded stores in villages with a 5 to 15,000 population. We now call on over 6.5 lakh outlets on a regular basis. We build 6.5 lakh outlets. We've added close to about 100,000 outlets this year. So we've continued relentlessly on our journey, and as hopefully the economic environment improves, I think the monsoon overall will have a positive impact on rural demand. The government spending is clearly weighted towards the second half. Construction activity remains healthy. Seeing all of this, frankly, we believe that growth should improve in the second half.
Right. Mr. Puri, your outlook on how the VAM prices have panned out in the quarter, and of course, what's the average VAM consumption rate during the quarter?
See, our average VAM consumption rate this quarter is $980 a ton. Last quarter was about 1,005. So it's not a substantial difference. We believe VAM is close to its bottom. We're also seeing prices as benign. We don't see VAM prices going up unless, but remember, we're in a geopolitically uncertain situation now. This new factor of geopolitics is something we have to keep a close watch on. Now, barring any black swan events in the Middle East, Russia, Ukraine, any of these, frankly, we see input prices remaining benign, at least in this financial year, and therefore us being at the higher end of our guided margin range rather than at the lower end.
All right. So, Mr. Puri, one more thing. Have you observed any kind of product mix change overall in this quarter?
See, we have consistently over a period of time been very clear that we must keep premiumizing. There is India now, the premium segment has become a viable segment. And therefore, across all of our categories, we keep looking at, how do you grow core categories? When, you look at a Fevicol or you look at a Fevikwik, our market shares are substantial. They're, in the range of close to 70%. How do you grow these categories? You grow via premiumization, so we have premium variants of these. We grow via innovation, where we find newer uses, and through better sales and distribution. I mean, quick commerce is now, become another good driver of growth. So in each of these, what we are seeing is on a consistent basis that we continue to premiumize, but it's not a substantial difference. It's a gradual journey.
So, Mr. Puri, just one question really from my end, and final question from mine at least. When you're setting up this whole range of Pidilite ki Duniyas, which I presume are tier 3, tier 4 rural, and therefore the propensity to spend on premium products might be less, but at the same time the company's fabric is to do premiumization. How do the two gel, and what happens to the growth mix? Does it move to higher premium products despite so many physical touch points in rural areas?
See, I think that's a great question, Neeraj. Remember, for companies our size and for any of the bigger consumer companies, we have to follow what I call as a 3 Indias approach. We have to have a set of products for premium India, we have to have a set of products for middle India, and we have to have a set of products for aspirant India. And each of these, there is an upward movement from aspirant into middle and middle into premium, and therefore we must straddle all 3 segments. In the Pidilite ki Duniyas, we obviously start with aspirant India. But you'll be surprised that in rural areas, for example, we've extended Araldite, we've extended our whole tile adhesives range, and we're getting a really good response. So, there are pockets of rural prosperity. So it's a mix of what I would say is aspirant and middle India. But urban, obviously, you will push far more towards premium India because there is a clear trend towards premiumization across. If you look at, for example, a simple indicator like the sales of high value real estate. Now, high value real estate is booming. When somebody is paying a large amount for high value real estate, he's willing to spend a lot more on the interiors than earlier. We must have a range that satisfies. I mean, ICA Pidilite, which are the costliest wood finishes in the country, they're actually world best because ICA is the leader in Italy, which is the leader in design furniture. We're still finding buoyant demand in the premium end of the business. Even there. So therefore, we must straddle all 3 segments. There is no either or here. There is and.
Mr. Puri, your outlook on the international business, because international business has constantly shown good performance. This quarter also, it grew in double digits.
See, as far as international business is concerned, we've always maintained that Pidilite wants to be an emerging markets multinational. We are on that journey. We have a substantial presence in the Indian subcontinent. You'll be glad to note that despite all of the unrest in Bangladesh, in the first half, we have grown Bangladesh at double digits. We continue to invest in the Middle East. We continue to invest in Africa. And we're getting results. We do it at our pace. But we are clear that these are markets that are very similar to India. And hopefully, because we know how to win in India, we will also win in these markets.
Well, a clear trend of premiumization for Pidilite Industries.